Hi, I'm Victor, and in this video, I'm going to cover Hanesbrands. This is a company that makes apparel, t-shirts, undershirts, underwear, all kinds of apparel that we would wear. The reason I like this company is that they are kind of a consumer staple because it's things we really need. It's not like, a $200 shirt or something. It's usually stuff that we're going to buy anywhere. It's going to be our socks, our underwear, the stuff that we're going to wear anyway. So that stuff we're going to need, especially families that have growing kids. So I've been a Haynes investor for about a year and a half, 2 years. And I want to tell you more about this company. As I invest in companies, I'm looking for three things. First, I want a discount on the investment. I want to know that, hey, I'm buying low and eventually that stock price is going to go up and going to reward me in appreciation. Two, I want to know that the company is operated and performing well. And I want to know that it's the right time to buy. Let's take a look at Haynes. So just a quick tour of their products. As mentioned, they have nice apparel items. These are things that are affordable. These are things that kids are buying to go to school with. These are things that adults are buying to be comfortable. And let's face it, with COVID, everybody's in their home office comfortable in a hoodie or in a nice t-shirt. So I believe that the Haynes product is doing well. And I'll get into their earnings call in a few minutes, but their earnings show that they are growing their business, which supports what I believe is going to be the story on Haynes and why I'm an investor in the company. So in addition to the socks, underwear, undershirts, and that kind of thing, they also have the Champion brand, which is one of those brands that it's not a Nike, it's not an Adidas, but it's a nice brand that's out there. It kind of gets sold through shoe stores and different apparel stores. And it also has a very good connection to direct to high schools and intermediate schools and colleges. So they, make jerseys and so forth for football teams, baseball teams, and so forth. So I originally bought Hanesbrands for the dividend and thought their stock was going to go up, but that hasn't really happened. It happened for a little while, but then it's had a downturn. Over the last 5 years, the stock's gone down 41%, which isn't great. As you can see, I started buying about 2 years ago. I saw an uptick in the stock, but then it really started to go downward, which has been somewhat unexplainable because the company's performing well. They have good financials, they pay a good dividend. So I haven't seen anything to discourage me as an investor, and I'm going to keep into the stock and probably buy more shares. Looking at the 1 year, it's a little bit of that downturn that I was explaining. Over the last year, it's really gone down, which is kind of weird because as I mentioned, coming out of COVID, people were going back to school, going back to work, going back to life, and their sales really went up. The stock really went up nicely, and then it started that downward trend, which is interesting. They had their earnings call last week. They had very good earnings. They had good growth. They had good profit, good cash flow. So I am going to continue to hold Hanesbrands because the company is operating well. They're generating profits, free cash flow, and paying a nice dividend. I believe that Haynes is currently selling at a discount of 45%. And here's why. I take a company's free cash flows that I expect over the next 20 years, and I discount them by a discount rate. In this case here, I'm using a pretty high discount rate of 9%, reserved for companies that are a little more risky. And this company here is a pretty good company, but I still want to use a high discount rate just to make sure I'm getting a good investment. And I take the free cash flows, grow them. I'm going to grow these by 4%, which is not even keeping up with inflation these days, but I'll grow those, the free cash flows over 20 years by 4%. And if I take that and take all 20 years, do a net present value calculation of those free cash flows, it tells me that the company's worth $6.4 billion, but the market cap for the company is only $4.3 billion, which offers up that discount I was talking about of 45%. Down at a share price, a per share level, the value per share is $18.22, but the stock's only trading at $12.60. So it offers up a nice 45% discount, which is why I'm really going to hold Hanesbrands and look to buy more shares. The performance of Haynes is really good. The management team really wants to grow the company, and they had good growth in 2021 of 11%, and they had Q1 growth of 5%. So it's a really nice growth plan. And this management team really is looking at the product lines that are growing the fastest and really putting a lot of attention and resources into those product lines. So good job, management team over at Haynes. The free cash flow for 2021 was $562 million. Nice free cash flow with a yield of 13%, really solid. Pays a nice big dividend of 4.76%. That looks really good. And they're guiding in Q2, they have a very tough compare, and they're going to decrease sales by about 3%. So if they can recover toward the back end of the year, I think, Haynes is going to be all right. They repurchased 25 million shares, which is good to see. And my outlook is that there is some upside in this stock, and they pay a really good dividend. And there's very low downside probability. Again, this is a consumer staple-like company, so I don't think that their sales are going to vaporize in this recession that we're supposed to have. I actually think they're going to hold up quite well in a recession. So that's why I'm going to keep these guys in my portfolio, because consumers will need apparel, and this is a very good option for people to buy. It's a nice, affordable option. So I like Hanesbrands for that reason. So Hanesbrands gets an okay scorecard. They are currently discounted if you look at them as an investment. The company is well operated, performing well. I think the management team's got a really good business plan, but the timing may not be perfect. And the reason for that is that I showed that downward trend. And I think if you give this stock a little bit of time, and especially this market that's just been on a terrible run, S&P is down like 15% year to date. I think giving it some time and really looking at the stock is a good idea. That's what I'm going to do. I'm going to be careful with Haynes. I'm going to continue to hold it. And at the right point is buy more shares. This video is for entertainment purposes only. I'm not recommending you buy Haynes stock or any other stock or security. I am not a professional. I'm just an investor, and I like to share my experience, and I hope you found it interesting. Oh, thanks for watching my video. Really appreciate it. I hope you found it interesting. If you did, feel free to like the video, consider subscribing to my channel, and hit that bell to be notified when I release a new video. Thanks again for watching. Good luck investing in 2022.